Hello everybody and welcome to the IC Markets commentary. My name is Chloe Edwards from Trade with Precision, and today I want to highlight some of the commodities markets and some significant levels and potential opportunities therein, starting with the crude oils. I've got West Texas here, and just on the monthly time frame to illustrate some of these very significant horizontal levels of support and or resistance. So where price is currently, price has actually broken down through a very significant level, both technically and psychologically, this $100 a barrel level here. The next potential level of support is down there around $90. We can see that back in 2012 and also back in 2010, this level was seen as support and resistance. So that $90 a barrel level is potentially where price could be headed down to if this downtrend does continue. Going down to the weekly time frame, we can see here that there is actually on the weekly time frame a lower high here. So this very extended uptrend that we've seen for much of this year, and in fact much of last year as well, has potentially come to an end for now. With this lower high, we also see the divergence or the agreement, the bearish agreement of the RSI and MACD indicators, suggesting that the momentum of this up move is for now over. And that has resulted in this extended pullback. And so the pullback has now come further than we would have liked to have seen if we were to continue trading this as an uptrend. And so on the daily time frame, actually, what we can now see is a series of lower highs and lower lows. We see this $100 a barrel mark breached, and price is actually just approaching these previous lows here. So that $100 a barrel value has been breached of late, and I'm just going to actually mark in where these lows sit over here. It's around $94, $95 a barrel, and that's the area that price is currently sitting. If the downtrend is to continue, then potentially price could push that all the way down to this $90 a barrel mark. Now, in terms of trading opportunities, a pullback on the daily time frame, perhaps back up to the $100 to see that as resistance before another leg down could be a potential opportunity. And also looking on the lower time frame, so for example on the 4-hourly time frame, might give an opportunity for some higher reward to risk opportunities while still trading along with this overall momentum to the downside. I would just be cautious approaching this $90 a barrel level because that could be a potential area that sellers could start taking profits and buyers could start to come back into the market, certainly in the short term. So short-term trading to the downside over the next few days on West Texas. Brent crude, very similar, looking at the monthly time frame here, and Brent actually hasn't quite broken that $100 a barrel mark, sitting just above there. We can see how that level has acted as significant support in the past, all the way back here, 2011, 12, 13. The next significant level of support is down here around 86.50, somewhere like that. So if that $100 a barrel mark does get broken down to the downside, then potentially there could be more of a move to the downside, all the way down here, certainly down to $90, perhaps even further down to 86.50. We can see here this chart pattern where we have this lower high and we have what someone would describe as a neckline here which were just sitting above. So once that neckline is broken, if it does break, there could be a further significant move to the downside. The MACD and RSI momentum indicators are suggesting further movement to the downside. And so again, on a daily time frame, I can see the lower highs and lower lows creeping in here, just the potential support at $100 a barrel. Now, we could look at this in two ways. This support level at $100 could hold, in which case I would potentially anticipate a return certainly back up to 115, where the kind of midpoint of this recent range is. That level has stood as resistance fairly strongly. So that's where I would potentially estimate price to pull back up to, and that could be tradable on a lower time frame, up to that 115 area. If the $100 a barrel mark breaks to the downside, then I would be looking to trade that to the downside also. So it really is price standing on a cliff edge here. Is whether that $100 level can break or whether that's going to bounce as to where we go from here. Moving on then to gold. Now, gold, again, here on the monthly time frame, just to show some of these significant horizontal levels of potential support down here. So gold has broken through a significant level of what was potential support at 1800. That was from the resistance back here in 2011, 2012. That 1800 level was a fairly significant. Price has broken down through that area. And now, if we just have a look at the weekly time frame here, we can see some further support, potentially around 1700 just here. I'm looking for a continuation in the downtrend, probably down to that 1700 level, and that could be tradable still on the daily time frame. If there's a pullback on the daily time frame, price is fairly overextended at the moment, but looking for a pullback on that daily time frame in order to trade further down to 1700, or alternatively, of course, down to the lower time frames where there may be an opportunity to trade short without such a big pullback if the momentum really does continue to the downside here. At that 1700 level, of course, I would be looking to see whether that level can hold, in which case I would anticipate a move potentially back up to 1750, even up to 1800, if a small uptrend might start at that point. Alternatively, if that 1700 level breaks, then I would be looking to trade short all the way down to 1550 potentially. Obviously, scaling out of positions and taking profits along the way, but there is the potential, if that 1700 level does truly break, there is the potential for that move to continue all the way down to 1550. Silver, fairly similarly, very, very bearish looking at the moment. This all goes along with looking for trading opportunities in line with a strong US dollar, which we are continually seeing at the moment. So silver has been equally bearish, and it's actually just approaching here a significant horizontal level at 18.5. So that level there, that's the key level that I'm looking out for at the moment. Again, on the weekly time frame, I see these lower highs, lower lows, price looking very bearish indeed. The MACD and RSI also supporting that momentum to the downside. Now, this level here, we're not very far off this 18.5 level, so it's very important what happens at this level. It could bounce, and if it bounces, even then there are a couple of options. So it could bounce and come back up, and this could be the pullback that we're looking for on this weekly time frame before a further move to the downside. If that bullish US dollar is going to continue, then it makes sense that perhaps the downtrend on some of these commodities could continue as well. So on the daily time frame here as well, we're just waiting for a pullback, and if price does make it down to 18.5, then that could be the beginnings of the pullback, in which case It could be just a case of waiting for that pullback to happen and then taking that as a renewed opportunity in a renewed price to potentially sell at, with the anticipation of a continuation of that downtrend. Obviously, using that 18.5 area as a potential target, not wanting to enter any trades with limited reward to risk down to that area. We need to make sure that the reward to risk is appropriate. And then at that 18.5 area, if there is a pullback and a higher low presents itself, then that's where there could be the potential for a move. Given that this 18.5 is significant support, potential for a move all the way back up, potentially even to the $22 level if the downtrend ends. If not, and if this bearish momentum continues, as per the market suggestion at the moment, then a break of that 18.5 level, and I would be going down to the lower timeframes to try and find opportunities into the market. Obviously, being cautious of false breakouts, I would need to see confirmed price action trading below the 18.5 level. But if that happens, then looking for further short opportunities there. So that's it from me for today. Please enjoy the rest of your week trading, and I look forward to speaking to you again soon.